Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. This is Aaron Edwards with Santos Springs, March 3rd, 2026. Man, it's March. Springtime's right around the corner. Starting to see planters rolling in Texas. It's the month of the battle for acres. So let's get started with the recommendations, and then we'll wrap up with just a summary of what the indicators are looking like on our end. So let me go ahead and share the screen. We're gonna do the recommendations, talk about the ratio between corn and beans, then we'll go over to the analysis in a little bit more depth. So. All right, so the work that we're gonna get done this week is we're going to get started for the first time on our new crop corn sales. So I'm gonna grab the yellow there and we're gonna sell 10%, oh, wrong marker. We are going to sell 10% of new crop corn. I like the idea of an HTA and locking in basis later. If you like the cash price, or maybe I shouldn't say if you like the cash price of corn. If your basis for new crop corn is acceptable, it's fine to just do a flat cash price. I think chances are we'll have better new crop basis sometime probably in the summer, maybe in the spring, and we'll lock it in at a later date. So HTA on 10% of new crop corn. We're just getting a stake in the ground. It's not 10% of production. It's 10% of the bushels that we've talked about for pricing, right? That's in your market plan portfolio. So with that, let's shift gears now and let's talk about this corn and bean ratio. So if we get, we've been tracking this over the last few weeks. So if we hold the price of new crop beans steady at 11.27, and then we take this range of ratios, 2.3 to 2.7, what is the range of corn prices that we could see? Well, we could see corn prices ranging between 490 and 418 and still be within that realm of normal ranges on corn. That's kind of how we're looking at this, right? So at 11.29 on new crop beans, we can have corn anywhere between 490 if the ratio is 2.3 to 418 if the ratio is 2.7. And then if we hold corn steady at 470, which is the current price, if we lock in corn and say at 470, what's the range that we could trade on soybeans? Well, at a 230 ratio, 2.3 ratio, that would give us a 1081 board of trade price on corn. And if we go all the way to 2.7, that would be all the way up at 1269.
1269. Let me get that drawn up there. I think the main point about this, at least in my opinion, is we need soybeans to go up so that we can lift the ceiling so that we could see corn going up as well, right? If we're going to keep that ratio, we need to see that bean market stay strong if corn's going to go up. In the current ratio, it's actually, if you round it, I think we're at 241, but we've just been hanging right around that 2.4 area since we've started tracking this, I believe 2 weeks ago. So we're just taking a look at it one thing at a time. We're going to start looking at the corn market. We'll look at the position of the funds, then we're going to back into the new crop. New crop. All right, so this is managed money, position of the net funds in the corn market over the last 12 months. The story really, let's see, the black will work nicely. Let me just get this out of the way. If you remember that January report, that came right in here. And so what happened? Really hard sell-off after that January report. The following week, it was still pressured. And then ever since that January report, what we've seen since these two bars are the reaction of the January report, ever since then, we've basically seen somewhat of a step up to the point that now we're actually not far from being net neutral in the corn market. We have gradually seen speculators getting out of their getting out of their oversold, their short position, their net short position. We've seen them getting out of their shorts and gradually getting close to neutrality. If we're gonna have decent prices for corn, we are going to have to see corn speculators get long. One of the hardest parts of making this new crop corn recommendation was this right here. It's barely March and speculators are still net short. So in March, net short, speculators are keeping the price artificially low, and we're already selling new crop corn at numbers that on many farms aren't profitable. So I understand the pushback, but before we get too far into that, I just wanted to show you kind of where we're at from a pricing standpoint on new crop corn. And this is what pushed me over the scale to actually make the recommendation. So this is new crop corn, December 2026 corn, going all the way back to, let's get this out of the way, maybe up there. Going all the way back to summer or fall of last year, really of 2024, right? We have all of 25 in here. This is 2025, so we go all the way back to 2024. Well, what we've seen with this crop so far, and I hope that this changes, but so far, if you look at the pricing opportunities above 470, okay? The spring rally from May last year, we had a couple of peaks there, and then this was, just for perspective, this run up here at the beginning of last year, this is when nearby corn was trading at $5. That run up at the top end of that, nearby corn was trading at $5. So as we look at new crop, how many opportunities have we had above the current price level? Right here, just look at this dotted green line. Above that, well, we had one opportunity last fall in November when the beans rallied, and I recommended soybean sales, did not recommend corn sales. Then we had a couple of opportunities last spring above this price level, and then we had one opportunity last winter when the nearby price of corn was $5, and that's about it. So the way I see it is, number one, next week we have the monthly USDA report. So is this going to continue skyrocketing? It could. But if we start our average let's say that this corn market trades in here somehow or other. Let's say it trades strong, right? Similar, all of these peaks, yeah, they went up, they came down a little, they came back up, right? But let's say that you get an average price here, whatever that looks like, you get an average price in the just 470 or just a hair better, 471, 472 on the board, December board, right? I'm not talking about cash prices. Think about a year where you start your average here, 10%, you start your average here. All right, 470 isn't great, but if this is our starting point on 10%, what are we naturally going to do? Well, we're going to be very cautious about selling prices below that unless we really have to. And if we start our average at 470, then all of a sudden we get back up to these price levels and yeah, let's go scale in some more sales. Let's try to bring up that average sale price. I think it's important. There's something to be said for getting a stake in the ground. And again, this is a pricing point where I think it makes sense to get a stake in the ground. Not aggressive. If you think of percentage of production, we're probably less than 5% on most folks' farms, right? We're not getting aggressive. It's just getting started on sales. And I do think from a risk management standpoint, at some point in time you say, came here, it failed, came here, it failed, came here, it failed, came here, it failed, came here. Well, how many times do we have to get in this price range and then see it sell off before we start getting some work done? And if you look at the other extreme, even not that long ago, right? Let's look at the beginning of this year. Let's say under 450 or under 445, which would be right around in here. How many times was it under 445? Well, in January it was under 445, and then we've had a handful of times. So we're at the upper end of the range, and we're making a small sale. It's not going to change anyone's life, but it's a small step in the right direction, in my opinion. As we look at May corn, this is actually really interesting to me today. Monday's trade is really interesting to me because we saw it get up over the 200-day and then it came back down to the 20-day, but it held. What I really hope, and before we get too optimistic, we're going to look at the bean market. But what this 20-day moving average has absolutely been support. If that continues in support, that's the trajectory. Oh gosh, that's a world we can live in, right? That is a world that all of a sudden we can get excited about. Now, we want to be cautious before holding our breath, before getting too gung-ho on it. But if we could get this crossing here, if you follow along, that's a golden cross, the 20-day cutting up through the 200-day, right as we come into spring planting. You get some hiccups at planting, get some South American weather. This is what a lot of times spring rallies, the build up towards a spring rally many times looks like this. And then how tall that rally goes, well, do we get a weather scare? Oh, it's turning dry. Okay, it came down. Oh, there's a crop loss in Brazil, and how high it goes depends on how you line up those weather scares. And also geopolitical risk. Right now, I'm not going to talk much about that. I almost pulled up a wheat chart this week, but I don't think that's quite the driving force of markets just yet. If wheat really takes off, then that's something we'll look at in depth. The reason I'm saying wheat takes off is because usually geopolitical conflict hits things closer to the plate first. Wheat, meal, so on and so forth. So now shifting gears to soybeans. As we look at the soybean market, the big thing from the managed money standpoint, the big thing on the managed money is we still are in that area of speculators being, I'll draw that better. We're still in that area of speculators being overbought. They have a long position that is overbought. Can they buy more? Yeah, that would be great. That would be awesome. We'd be closer to $12, but they already are in that overbought zone. And this is before we get too bullish on corn. I want to show beans, and I'm not trying to be Debbie Downer here or too pessimistic, but one of two things will probably happen here. If you think about this as a double top, so the beans came up to this price level, and then again, that looks, you could make a strong case from a technical standpoint that this is a double crop forming, a double top forming. And if that is the case, we would typically see significant retracement from this standpoint. If this is not a double top, and this is absolutely what we would hope for, if this is not a double top, this is where beans probably just go parabolic, and they just hold your horses. They just take off. And we've all seen that when the bean market, you blink and then beans are up 50 cents and then they're up $1, and they just go. They go parabolic, they just take off. And that's what we would all wish, right? We've made strong sales. We've made strong sales in here. If you missed it, we've had a second opportunity. Even though we've sold here, I still hope that beans just absolutely skyrocket. We'll sell more. We've got more work to get done. But if beans just go to 12 or beyond that, will we not have selling pressure? There's still a lot of beans out of South America that are unpriced, and a lot of those need to be priced by April. If beans go to $12 or $12.50 right now, will that not impact the battle for acres? Will there not be farmers scratching their head and saying, gosh, $4.70 corn, back out my basis, or $12 beans? I can make a living with $12 beans. I can make that work. Maybe I'll plant a little bit more beans. So my opinion is that above this here into this zone, like just say, can we go parabolic and go to $12? I hope so. I would love to see it. If that happens, I think corn takes off as well. But I'm cautious because I think there will be selling pressure on top of this market. And if there is selling pressure above here and we are at a double top, is there not selling pressure here? And that's the thing for me that's tricky. And I do think that probably this is more likely a double top pattern than it is a parabolic move. In my opinion, what the best case scenario would be is we get corn up into a strong uptrend, keep it climbing higher, beans make whatever correction they have to the downside, but they stay basically above here, and then it doesn't get a full sell-off, it gets just a small retracement, and then maybe we look at beans taking off into the spring. Maybe that's an April or May story or a June story, or it's a little bit down the road. But all the same, I've recommended sales at these price levels. Make sure you get your work done. Will it work? I don't have a crystal ball, right? If we have the Iran thing getting more intense, and then all of a sudden oil is a story, and then we get all commodities going up, and we get a bullish run, that would just absolutely be fantastic. We really need a break. I hope that happens. I still think the sales at these price levels are solid risk management moves. So I'm assuming that you've gotten your work done by now. Let me know if you have any questions. With that, we will wrap up and go to the summary part. All right, let's summarize this. Let's take it home. All right, so as we look at the corn market, seasonality is actually a sell. We're in March. Calendar flipped, and March is one of those months that it is possible we put in the annual high in March. Historically, it's one of those months that has a decent probability. What are the stories that oftentimes give us, if we are to have a March high, what are the stories that gave it to us? If you have a wheat rally, which we are having some decent strength in the wheat, South American weather scare more recently, and battle for acres. Those are the three usual suspects. If we are going to have an annual high put in March, those are the three headlines to kind of watch. And we're getting some of those. I mean, wheat's decent. There's some hiccups with South America, and there's a bit of a battle for acres story as far as, beans really need a little bit more wind in the sail, but it could happen. Managed money for corn is neutral. It's neither a buy nor a sell. The trend on corn is up. For soybeans, seasonality, it's neither a buy or a sell. The managed money position is a sell. They are overbought, and the trend is up. Basis levels in the Eastern Corn Belt are on par with historic averages. In the Western Corn Belt, we continue to see basis levels climbing and recovering, but in most regions, they are still below historic averages. The soybean market looks like it is putting in a double top. If that is the case, we would expect a sell-off. The alternative and more desirable possibility is that the soybean market goes parabolic. However, my opinion is that that is the least likely possibility. The corn market is well supported at the 20-day moving average, which climbs higher every day. We are not far from a golden cross, which is potentially quite bullish for corn. With bullish technicals on corn, and bearish technicals on soybeans, the ratio between corn and beans will likely be the determining factor in whether the market as a whole is bullish or bearish. So far, this ratio is in balance, but there is leeway on either side. And we do not have questions this week, so that'll be a wrap. Hope you have a great rest of your day, great rest of your week. Let me know if you have any questions.